Raymond James in Waterloo, Ontario, Canada. Today on the webinar, where do we investors stand? It is Friday, September the 12th, 2025. Let's get started. I messed up my first chart here today, so we'll start off with a little something different here, but these are the strongest assets of the year, and that would be silver, gold, and Bitcoin, all up more than stocks. These are quarterly charts, so again, that's really zooming out here. We got about 7 years. You can see there are an uptrends, and again, we always want to zoom out. I can't emphasize that enough. We can see a lot of things from the day-to-day, you know, those that pay attention to their accounts too closely, it can be troublesome because we can be caught thinking something and missing the bigger picture. Let's move forward here. So the S&P 500 just continues to defy, you know, everyone's expectation here for a pullback. And what I mean by that is that sentiment remains very negative. Pullbacks in an uptrend are helpful, I think, to add value to a portfolio in terms of buying, adding maybe even index exposure, whatever you're buying. I mean, from a perspective of what we're looking at right here, we've got an RSI 5 on the bottom. We did pull back at the beginning of August, getting oversold on that RSI level. We did not get oversold in the last kind of two little dips, but these are just kind of 2-day pullbacks really for the most part. Very, very gentle and clearly an uptrend at new highs, and that is bullish. You can see here from the AAII survey, you can see investors here week ending 9/10, the September 10th here, 49.5% bearish. So again, we've got an increasing amount of bearishness, and yet the market is going to highs. And I have to tell you, that is actually from a contrarian standpoint bullish, because it means investors are not committed, they are not buying into this. And again, I think the last time I looked at institutional surveys, we see the same thing. So we always want to remember that there are always reasons to see a market or perhaps a narrative one way or another. But again, the market sometimes speaks a very different language. Now, I do want to talk about US long bonds. Of course, they've been very poor over the course of the last 5 years, but let's give credit where credit is due. You can see here in the short term, this is a daily chart. You can see they actually bottomed earlier this year. I think that was in May, if not early June there. And we've got a higher low here. And now we've got a higher high. So in the short term, we've got a short-term trend that has turned upwards. The blue line is the 200-day moving average. So all my moving averages have turned upwards here. And so that means we are in a short-term uptrend. Bottom panel, you can see versus stocks, right? So bonds have been very, very weak versus stocks. And we've had a sudden burst of recent outperformance. Again, we're at the squinting stage here. So let's not get too interested necessarily. At the same time, let's acknowledge what is changing and knowing that a short-term trend has to change before an intermediate-term trend, before a long-term trend. Precious metals just continue to soar. Wheaton Precious is one of the stocks here I've talked about many times. You can see making relative highs here versus the underlying gold bullion. And then on the right side, we've got the iShares Global Gold. But again, this is characteristic of any of the gold stock ETFs. This is XGD in Toronto. We can look at GDX. We can look at GDXJ. We've talked about all these before. But again, very, very strong uptrend here. And we broke out later this summer. And you can see, again, stocks are clearly outperforming physical bullion. Now, I want to drill in. This is Wheaton Precious again, 3 ways. Okay, so the top chart is the same. Yes, your eyes are not playing games with you. They are the same, but in the bottom panel, we can see, so versus gold bullion, which is the chart I just showed, that is an uptrend, versus gold stocks. You can see this is actually making a 1-year low. What that means is that in the recent past, like the recent couple of months, Wheaton, although it's going up, it is relatively underperforming XGD. Now, stocks can do this, right? They can push and pull and ebb and flow, and the relative performance can do just that too. In an ideal world, I would certainly prefer the long-term relative outperformance of an asset or a stock to add that to a portfolio. That being said, I would say that is not necessarily justification to sort of run away from a stock like that. So again, our All in Sync pool does own Wheaton Precious, but at the same time, I want to point it out. And on the right side, you can see it's been outperforming stocks, although again, you can see that the relative high for stocks was actually made earlier this year. Again, perhaps another way of seeing some of that relative performance in there. Just want to touch in on these cybersecurity stocks. Again, there's a lot of kind of differentiation within here. So at an industry group level, I've said before that we want to see kind of, you know, ideally, you want to see all kind of everything, rising tide lifts all boats, right? And so here's 6 stocks. You can see here 2 of them have green circles on them, Cloudflare in the bottom right, and there's CyberArk in the middle left there. You can see these stocks are at highs, and you can see here there were lots of these biggest bars against earlier this year. And again, we have not seen recovery from a number of these names, in fact, most of these names. And so again, from a relative strength standpoint, again, we can see relative strength by noting that these stocks compared to the others are going higher. I know that without even looking at the charts, but either way, of course, either way. We want to know what the absolute charts look like, and I wanted to show that to you. Here's a few stocks here, just kind of looking at some all-in sync stocks here. Tesla is continuing to sort of, I think, move higher here, and it is breaking out of a short-term base. Again, the real kind of next resistance level will be back at the end of 24, high of 25s here, that level. At the same time, I think I just read yesterday that we got 80 million shares are short Tesla. That is the highest short position of all the big stocks. Energy is a kind of, a utility stock with an AI theme, clearly in an uptrend. Broadcom just continues to impress. I mentioned it last week on earnings. Stock is up 17% since I plotted that for you last week, and Fairfax has just been a long-term leader. Let's finish off with Sector Watch here. There's the gold stocks. We already touched on those. And down at the bottom, you can see technology kind of taking a week off, down about 1.5%, industrials, utilities, and everything in between. Just a reminder, I'll be gone the next, well, I guess 2 of the next 3 weeks anyway, and I am off to Malaysia on Sunday. But again, I appreciate your attention. I appreciate you watching this, and I always appreciate your feedback. I can be followed on X at David Cox RJ. And thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.